Are you ready to start reaping the financial rewards of your hard work, but unsure how to cultivate lasting wealth? Many people focus solely on earning more, but without the right habits. Without the right habits, it can feel like wealth slips through your fingers. By adopting smart, intentional money habits, you can nurture your finances and see long term growth that leads to true financial abundance. Hello, and welcome to Rise to Your Money Power, where we have honest conversations to empower you around your relationship with money. I'm Pamela Plick, your host, and I'm on a mission to empower women to confidently build wealth from the inside out. I help purpose driven women overcome feeling anxious, stuck, or overwhelmed related to their personal relationship with money so that they can become confident, achieve peace of mind, financial freedom, and impact. And I do this through my signature programs and services, as well as through events and community. Just like a farmer tends to their crop, nurturing their growth and protecting them from the elements, building wealth requires care, intention, and patience. It's not just about how much you earn, but also about how you manage and grow your resources over time. Today, we'll explore 5 smart money habits that can help you to cultivate and harvest financial abundance so that you can reap the rewards of your hard work and feel secure in your financial future. The first smart money habit that will help you cultivate and harvest financial abundance is track your spending and set a budget. Yes, I know the dreaded B word. A lot of us dread the word budget, but it is one of the most crucial steps towards financial success. And that's knowing where your money goes. That is so important. Tracking and spending gives you the power to identify wasteful habits and prioritize what truly matters. Now, a budget isn't about restricting yourself, but it's about giving your money direction and purpose. And it also helps to ensure that your spending aligns with your financial goals and your values, truly important to you. And I want to mention too, I am a big fan of the zero-based budget. And by that, I mean making sure that every dollar of your income has a home or it has a direction. So by setting up a zero-based budget, what you do is you calculate all of your income and then your expenses, as well as any amount that you want to earmark for savings and investing. So by having everything have a home, then you know that everything is taken care of. And so everything is on automatic pilot. You don't have to worry about it. So creating that budget is so key to really understanding, what your cash flow is and being able to save for the long term. Because when we talk about financial planning, it's all about cash flow. Because if we don't have the cash flow, right, or we're not directing our funds to particular areas that are important to us, then we're not going to get to where we need to go. So, one action step that you can take to track your spending and set a budget is to start tracking your expenses for the next 30 days. So track your cash flow. okay? Everything that's coming in, everything that's going out. And you can easily do this by either using an app or if you like to use spreadsheets, using a spreadsheet to categorize your spending. Another tip is that most commercial banks have a cash management tool inside of their online banking app. So if you're using online banking, with your bank, then that would be a great way because everything is going in or coming out of that checking account anyway. It's a great way to track your cash flow. And once you've tracked your cash flow, then it's time to create a budget that truly reflects your priorities and supports your financial goals. The second smart money habit that will help you cultivate and harvest financial abundance is to pay yourself first. How many of you have heard that term? Pay yourself first. This is also key. In order to grow wealth, it's essential to be consistent in setting aside a portion of your income to savings and investing. Paying yourself first means prioritizing your financial future before any other expenses. And it ensures that you're consistently building a cushion not only for emergencies, but also for investing towards the future no matter how small the amount. So when you're setting up that budget, after you've created your cash flow, you're creating a budget that's realistic, that um, that you can stick to, and then making sure that you built in that to line items to pay yourself first. And like I said in step number one, making sure that you set aside money for savings, like for your reserve or your emergency fund, and also setting aside money for investing. So paying yourself first is so key. Now, one action step that you can take to actually begin to pay yourself first is to create a percentage of how much that you want to set aside each month to pay yourself first. So this is going to come off the top, right? Because you're setting aside, you're creating an automatic transfer. So as soon as that money comes in, you designate a date that you want and the amount that you want to be transferred to your savings account or to your investment account. And so set up an automatic transfer um, each time you get paid. Or each time you're bringing revenue into your business, making sure that you set that up. And your goal should be to save at least or transfer at least 10 to 15% of your income to start, and then increase it as your earnings grow. And if this seems a little bit high, then pick an amount, whether it's 1%, 5%, pick an amount and just start with the goal of increasing that amount to the 10 or 15% of your income. The third smart money habit that will help you cultivate and harvest financial abundance is to diversify your investments. Now, wealth isn't built just through savings, it's grown by investing wisely. And I want to take a minute to talk about the difference between saving and investing. The purpose of savings usually is to set aside money to have it easily accessible. Um, if in the event you have an emergency, or maybe you have it earmarked for something in particular. Like let's say you need to make a major purchase. You know you're going to make a major purchase within the next couple of years. So rather than waiting until that big expense comes up, you might set aside so much each month towards saving towards that big purchase, like maybe um, buying a new car, or you may need to do some repairs on your home. Those are going to come up, or maybe even some remodeling down the road. So that's a great use for savings. Money that's earmarked for something in particular that's coming up down the road, or money you're setting aside in the event of an emergency. Um, you have that money set aside and it's easily accessible. And so as a result, if it's easily accessible, it's not going to earn a lot of interest. And that's fine, because that's not the purpose. But that's where savings fits into your overall plan. Now, investing is what is going to grow you wealth over time. And the key with to investing is to invest wisely, but also making sure that you are diversified for the long term. And that is really the key to success, is diversification, because you can never be too diversified. And what that means is making sure that you're spreading the risk among all different asset classes, such as stocks, bonds, real estate, versus having all of your eggs in one basket. So it's key to make sure that you are well diversified. And by creating a balanced portfolio, you can protect yourself from market fluctuations, because markets are going to go up and down, making sure that we are protected against the things that we really cannot control. Things that we can control when we're building a portfolio is, first of all, that we have um, or solid investments in our quality investments in our portfolio, and that we are well diversified, and that we take a long-term perspective. And so by creating that balanced portfolio that's based on your risk tolerance and your time horizon, meaning when you're actually going to need the money, then that helps you to maximize your chances of accumulating that wealth over time. And it is key. Now, that's something you can do if you're self-directed, meaning you manage your portfolio on your own. You want to make sure that you educate yourself about the ins and outs of investing, or even the basics. Start with the basics of investing. And if you're feeling that it's a little bit daunting to create your own portfolio on your own, then that's a time when you want to um, work with an investment portfolio or I'm sorry, an investment professional who understands your unique situation, what your goals are, your vision is, and helping you to achieve that over the long term. Now, one action step that you can take to begin to diversify your investments is, if you haven't already, then start learning about different investment options. And a great way to do that is really to focus on learning researching one piece, or reading one piece of financial information. A day is a good way to start. One piece of information a day, or doing one piece of research at least once a week, and learning about investment options. There are websites that can help you with that. Like, for example, Investopedia is a great website, and it focuses on investments. So if you're wanting to learn about different types of investments, or different, and what different investment terms mean, that's a great place to start. And the key is making sure when you're getting this education that you're going to a website that's reputable, that is not trying to sell you something, but really about educating you as an investor. You also want to consider working with a financial advisor or financial planner, maybe even if you're needing additional professional guidance. Or even if you just say, you decided, well, I feel like I can manage my own investments, looking into potentially using robo-advisors to create a diversified portfolio that matches your risk tolerance and your goals. But the key is to make sure that you educate yourself before you invest and truly understand your why behind your investment decisions. Now, the fourth smart money habit that can help you to cultivate and harvest financial abundance is eliminate high interest debt. Now, debt can be one of the biggest obstacles in harvesting wealth because with high interest debt, especially from credit cards, that can drain your finances and make it harder to invest or save because the more money that's going to pay debt, that's less money that's available to invest or save. And prioritizing debt repayment can free up resources to put towards building the wealth that you desire, thereby allowing you to focus on growth rather than just survival. Now, one action step that you can take to begin to eliminate high interest debt is to first list all of your debts. Just do it on a sheet of paper, really easy. List all of your debts from highest interest rate to the lowest interest rate. Then what you want to do is commit to paying extra towards the interest rate or the high interest rate debt while making the minimum payments on all the rest. So you're still going to make the minimum payments on all of your credit cards except for the one that is the highest interest rate. And that one you're going to pay, the minimum, but you're also going to include any extra that's built into your budget and add that to that payment. Now, once that debt is paid off, then you go to the next highest debt, and you're going to roll the payment from the previous highest credit card or other consumer debt plus the minimum on that next highest debt and pay that towards that particular debt while paying the minimums on the lower interest debt. And then you just continue that process until all of the debts are paid off. And another term for that is the snowball effect. And it's a great way to start to prioritize and lower your high interest rate debt. Now, the fifth smart habit that will help you to cultivate and harvest financial abundance is to protect your wealth with insurance and estate planning. While building wealth is important, it is key, but protecting it is equally as vital. Now, you want to make sure that you have adequate insurance coverage, such as life insurance, health insurance, and disability insurance, that shields you from unexpected financial shocks. Now, this is important, you know, with if you are employed, usually your employer offers employee health plans, but it's so key and in life insurance while you're employed. Now, also, if you're self-employed, you know, the burden is on you to make sure that you make sure that you identify, first of all, what type of insurance you need and that you're continuing that particular coverage. And it is so key because as entrepreneurs or business owners, you know, our it's so important that because when we don't have when we're not able to work, maybe due to an illness or disability, there's no one going to pick up that income slack. So you want to make sure that you have the appropriate insurance. And then another key for or type of insurance that self-employed individuals need to look at, depending on what type of services you offer, is making sure that you have liability insurance. You know, that's key as well. Do you provide advice to clients, or do you have a location, physical location that clients come in to see you? Making sure that you have the appropriate liability insurance is key as well. Now, also, estate planning ensures that your assets are distributed according to your wishes and that of your family, and that your family is taken care of in the event of you passing away. So the only way that your wishes are going to be honored is if it's in writing. So doing some smart estate planning is so key. And another thing too, it's interesting because when I talk with women, you know, women entrepreneurs or even professional women who they don't have children, or they may not have immediate family members who are dependent upon them, and they're thinking about, where is it that I want my money to go, or what is it that I want my legacy to be in the event that I'm not here anymore. So making sure that you have a solid estate plan in place, and making sure that, you know, the key is to make sure that your assets are distributed as per your wishes. Now, one action step that you can take to protect your wealth with insurance and estate planning is to review your current insurance policies to make sure that you have sufficient coverage. Maybe you took out those policies a number of years ago. It's key to make sure, you know, key to keeping them up to date, but also making sure that you know what those policies cover and if there are any changes that you need to make. Now, in addition, it's important also to create or update your will, and consider working with an estate planner to protect your financial legacy. Now, in conclusion, harvesting wealth is a process that takes time, effort, and smart financial habits. By tracking your spending, prioritizing savings, diversifying your investments, eliminating any high interest debt that you may have, and protecting your assets, that opens you up and sets you up for success in creating the financial abundance that you desire. Now, remember, building wealth is not an overnight process. But with consistent effort, you can begin to see the rewards of your labor. Now, let's recap quickly what we covered today. We explored 5 smart money habits that will help you cultivate and harvest your financial abundance so that you can reap the rewards of your hard work and feel secure in your financial future. Step 1, track your spending and set a budget. 2, pay yourself first. 3, diversify your investments. 4, eliminate any high interest debt. And lastly, protect your wealth with insurance and smart estate planning. Now, I'd love for you to take some time to reflect and on which of these steps resonate most with you, as well as your current relationship with money. And ask yourself these 3 questions to help you to gain clarity and motivate yourself into action. First, ask yourself, what are some of my current spending habits that are blocking me from wealth building? Number 2, ask yourself, how consistently am I paying myself first, and how can I increase that percentage? And lastly, ask yourself, what steps have I taken to protect the wealth that I've already built? Now, if you're ready to take the first step towards financial empowerment and success, then I'd love for you to invite me for a powerful money power breakthrough call to unlock the key to transforming your relationship with money. Together on this call, we'll uncover what's holding you back from aligning your vision with your goals, and identify the next inspired step to pave the way towards ultimate financial freedom. Now, you don't want to miss this opportunity to create a brighter future for yourself and your business. So, to learn more and apply for your complimentary Money Power Breakthrough call, just go to pamelaplick.com/thank you. That's pamelaplick.com/thank you to access the link to schedule your call. Then, once you've scheduled your call, go ahead and check out my other tools and resources to help you begin unlocking your financial freedom and setting yourself up for long-term success. In closing, I'd like to leave you with this final thought. Paying yourself first is the most powerful investment in your future self. Thank you so much for taking the time to be with me today. And until next time, remember, you can rise to your money power. See you on the next episode.